What's up, you guys? If you're struggling with entry models and bias, by the end of this video, you will 100% have a better understanding on how price books. As you guys can see, there's a free course in the description. You guys want to check it out while it's there. Alright, so jumping right in, right? The times you want to be focused on trading would be 9:30 to 11 p.m. Once you arrive to your chart post 9:30, so 5 minutes before 9:30, if you're bullish on the day, you want to be looking for shorts because you don't want to be buying at a premium. If you're bearish on the day, you want to be looking for longs because you want to be buying in a discount. The overall objective is it comes down to where is your long-term bias. So from midnight to 9:30, you want to filter out all that price and you only want to trade around the open. So if you are digging up into a premium, as you can see here, a premium is if we are above midnight open by 9:30. That's a premium. So once you're in a premium, you only want to look for shorts. And if the midnight opening price was above us and we were trending down, you only want to look for longs. So with that being said, what that would look like is midnight opening price here. We are bullish on the day. So arriving at 9:30, we would like our inversion breaker entries to the downside, taking out whoever's been making money overnight. The checklist I like to go through is 1, are we in a premium or are we in a discount? 2 would be engineering liquidity. So I like to see the overnight engineer liquidity. And the last step, which is the entry model, the inversion fair value gap entry. This is what I like to look for. So if you want high probability trades, you need to understand the difference between premium and discount. So if you're bearish on the day and you want price to go lower, your best bet is to be a seller in a premium. So anything above midnight is a premium. Using your PD arrays, you can see we have a SIBI here and you have an old high here. So price can use these levels as a premium array to go lower. You have to wait until 9:30 so you can see where price engineers liquidity and digs itself into a premium or a discount before the open. As you can see here, midnight opening price is here. We're above that before the open, so your high probability trades are not going to be long, they're going to be short. As you can see, we're above buy side liquidity here, and it looks like we might dig into this. Dropping down to the 5 minute, this is where we spot the engineer liquidity. So looking at the 5 minute from midnight to 9:30, I like these liquidity pools here because they're set in a premium. Dropping down to the 1 minute, this is where we find our checklist. So dropping down to the 1 minute time frame, you can see we have those liquidity pools here that are placed in a premium. We are above the midnight open, so we're very bullish. And we're not interested in longs because it's in a premium already. So as you can see here, we had a market structure shift to the downside. We had an inversion fair value gap. And what makes this high probability is the fact that we are so far in a premium that market structure shifts to the downside are sensitive. This is where you can place a short and you can target midnight's open because the logic is this is the wick. And the 3-step checklist is 9:30 manipulation, market structure shift, PD array, in a premium. Alright, so this is going to be a little quiz to see if you guys got the lesson down, but from midnight to 9:30, if you want to be a short seller, you want to do it in a premium. If you want to be a buyer, you want to buy in a discount. If you're ever at the point where you're in a premium and you're still bullish, wait for price to dip down beneath the open and then go long, or just simply paper trade short because your high probability trades are not going to be long. I'm telling you that now. So looking from midnight to 9:30, you can see opening prices here. And we just wait until time. Okay, so we're bullish. My question to you guys is this. Put it in the comments. Are we looking for shorts or are we looking for longs? And I dashed them because they're flimsy. And we have a SIBI here. A quick tip I do is I like to look for an opening range gap, preferably under me. So 5 minutes before the open, I'll mark out where we have the gap. I'll make it red, right? So I can see the opening range gap is under us. So by the time we get to 9:30, I'll know the gap is lower. So we have a discount opening range gap. Dropping down to the 1 minute, I just wait on time in my entry model. So it looks like price is going to run up here maybe. As you can see, we're in a premium. We have an inversion. So these are the shorts that I like to take. Put a limit here. Stop loss here. And you can buy at these lows down here. So this is what I like to do to position myself in the most high probability conditions. Even though I'm bullish, I will still short because I'm not willing to buy in a premium. So we're going to jump into some general knowledge. It's a CPI day for this review, and I'm going to show you guys the steps I use to come down to an actual bias. The first step, I like to use the seasonals and see where we're going. Each week to month, I'll check this and see where we're at in price. If you don't know how to use this, there's a 30% discount code below for the full A to Z course. And the second step I do is I select the days I'm trading based on the news. So as you can see, Monday was low probability. Before CPI is pretty much low, so I like to trade after that. So on Tuesday is the day we'll be focusing on. What's up, you guys? So if you want the previous day high as the draw on liquidity for the day, you want to try to be a buyer beneath the midnight opening price, because essentially everything under here is going to be the daily candle wick low. So if you can position yourself for a long under the midnight, that's your high probability trade. If you want price to go lower, then you want to be a seller above midnight opening price. So you got to wait until 9:30 and then wait for your reversal model to be put in after the open. And then you can look for shorts. Until then, it's best to be sidelined. Don't engage until CPI is released, obviously, and then use your model I gave you guys. So just a quick update and recap on today's price action. I seen we were above midnight open. So we were in a premium. I let the overnight play out and seeing who was making money, and buyers were making money. So I wanted to attack them. We had Asia low. We had some overnight lows. I seen my entry model inversion here. I put a limit. Eventually it ran down and tagged Asia low. So here's the live callouts to the server that I gave you guys. Look, 9:33. I said interest is lower because it's in a premium. I'm not looking long. I'm looking down here. And then the aftermath, of course. And if you guys want weekly PDFs and days I'm looking to trade, you can download that here going forward. And don't forget, there's a 30% discount code down below to this A through Z model. Drop a comment if you guys like this video. Subscribe if you guys like this video. Thanks to you guys. My weekly forecast levels will be remaining.
Now right away you can see it's using it here and here. And where do you think it's drawing to? Before this even formed, before 9:30 even happened, while it's dropping down, in your mind you're going to cast forth a vision. This is what I do. I'm looking at the market and I'm casting forth a vision. I'm waiting for a price run that creates a long, protracted down close candle. I'm waiting for that to form. I'm anticipating that to form. Because I know all of this reaction from this run here is likely to see us go all the way back down to take overnight lows. That's the draw. Now, the easiest way for you to have this on your chart or a routine is overnight lows. Just simply mark off midnight Eastern time to 7 o'clock in the morning. Whatever the lowest low there is, if it's relative equal lows, that's a loaded deal. That's where liquidity is. It's going to want to seek that if it's bearish. Not all the time, not that very day, but that's how I classify it. I'm looking for that lowest low overnight. In this case, we can see it being here.